Hey, what's up, everyone? Today I have for a day trade NAS100 review. Um, I have to explain that I did lose today's trade, and I actually went into where's my phone? How much did I lose today? It was more than 1%, but it was less than 2%. Let's see. A custom. So I lost 1.5% today, and that's not good because it was gonna I was bullish and I went in for some shorts, and I knew it was gonna be a continuation day. My mentor Andre and everybody in the group chat was kind of having that suspicion, but yet I missed the trade off and tried to FOMO into catch the high reversal and all that stuff and lost. So it's on these days. Let me go ahead and come this way, guys. So yeah, my girlfriend has some stuff on the background. She's still figuring out how to organize her space, or my fiance. But what's it called? In this day's worth of information from the dash line to dash lines one information. So this is Friday's price action, the market close. So what we can see here is that at the market open, that's usually within this gray area, because this is green overlaps with the pink, causing this gray. So this is London session, and then the New York session starts from here to here. So right at 9:30, look at a reaction, a push, and missed this trade for essentially that could have been a 25 pip stop loss. Oh my god, guys, it's ridiculous. So let's say we leave our stop loss here and we miss the minimal part, and we catch the, like, right here. This turns into a 1 to 4.8 risk to reward. 25 pips. Right here, we could have even had it at like above this 12 a.m. open, because if it's gonna reach the 12 a.m. open, we could have it at the next 62%. If it's gonna go down, it's gonna go down 30 pips. This is a really good trade, and this is my fiance's kid, Mars. He's looking for something. Mars, what do you need? Okay, he's not coming back. But or the standard 50 lot risk, and at any point in here you can see how like good the risk could have been. Even like right here, entering as it's starting to squeeze higher in this range, 50 pip stop loss, well within our range, and could have been just targeting the top of the order block. So right as price was in this range, we could have had a 1 to 3 risk to reward day, guys, but instead I lost 1.5% because I was trying to catch a reversal, right? Like, oh, look at this, wow, but this was the overall trend, and if I miss it, then I miss it. It's like just a continuation day of yesterday and the day before. I remember I got in right in this range right here. Oh my god, imagine me holding that still. Damn, that was the low, bro. That was the low. Frick. Yup, this would have been a nice day to have just held this trade for 3 days, swing trade. So I'm looking right now, guys, and I'm learning. But I went in for some sells here, guys. I got knocked out. You can see where price was targeting. It was targeting the Asian session high. That was the trade-off. We did a Fibonacci from the bottom of London, from here to here. And it had a 50% retracement. And I actually tried doing a retracement with this to that, but it never got into that. So that one's ignored, guys. Please ignore that. So then you guys can see that there was this impulse London made, right? End of Asia, we had a London impulse. We wanted to be a London continuation bullish move today. Exactly how it played out. I was waiting for a 70 to 79% fib retracement, because I like to see when price comes down and covers the body. So it needed to come below the 12 a.m. open. I was targeting right in this general area, and I missed my entry by about 1920 pips, guys. I missed my entry by about 20 pips. Well, price didn't enter my OTE by about 20 pips. That's much more quality said, right? Better way of understanding that. So that's it today, guys. I finished the week. I believe I figured out the math already. Negative 3.9%. So averaging out my wins and losses for the last 9 weeks, I just finished up my 9th week. I am up 7.9%, but I have to give back 3.9% of this to my twin brother, because I'm just trying to get a feel like, oh, I don't really want to give any of this back, but here I am having to put down 3.9% and give it back to him. Next week, guys, my intention is to make at least 2% and work my way back up into my equity curve, back up into a healthy rise. If I take a loss next week, I'm in profit. So my goal is to just take quality setups. And if price action didn't retrace into my OTE area where I was expecting price to go, guess what? I skipped the day, right? Because it's better just to not have to FOMO in and not have to, because if we're not getting in at the sniper entry, it's just best not to FOMO in. So I hope some of you guys caught this trade right here. You guys, I hope you understand what I'm saying as I talk. If you guys don't, write your questions in the comments. Like and subscribe. Forward this page to somebody who's learning to trade, and let them know that, you know, I'm over 9 weeks. I'm still up 7.9%. I said, yeah, 7.9%. So if anybody's looking to manage their own accounts, you know, at the end of these 3 weeks, you know, I might be up 15%. Another couple of weeks. No, because if I'm up 9.4%, I feel like I'm definitely going to be around 15%. And think about that. Most people at the end of the year expect to yield 10 to 15% in the stock market, letting their money sit. And I just went 3 months of just trying to trade correctly, and I made what most people make in a year in 3 months. So the more I finesse and refine my trade, my entries, my emotions, my FOMOing in, revenge trading, over trading, FOMOing out of a good trade, having faith and the confidence to let a trade run, because I know I've backtested enough to where these things can go grab liquidity or to target fair value gaps, order blocks, opposite retracement levels, or fib levels, you know, big figure levels, you know, time of day, maybe target, you know, whatever, agents, the highs, the lows of whatever I'm targeting. You know, it could be, in time, in a year from now, I'm going to look back and be like, damn, thank you for never giving up. And I feel that way now about my trading from 2 years ago. I was really bad. I was taking 100 trades a day, and then I knocked it down and kept refining. Now I'm taking 1-2 trades a day, 1.52% max a day, and I don't even want to do that. Like, I really only want negative 1% on days that are stupid, visible, obvious days for the setups. Like today was an obvious day, but it just never missed my OTE, which means, guess what? 0%. I would have missed it rather than had 0% rather than took a 1.5% loss. Now imagine if the trade did come down into the 70 to 79% fib level, 50 pip stop loss under about the Asian session low, you know, like right in this range, and targeted weekly high up here, this 30-minute order block. This is a 200 pip move, guys. This is a 1 to 4 risk to reward. This would have been an easy day. Now, if I would have maybe had a 25 pip stop loss, if it was going to go down to 79%, maybe 30 pips. You know, this could have easily been a 1 to 6.5 to, you know, 25 pip stop loss. This could have been a 1 to 8 risk to reward day right here if this would have just tapped my entry and if I would have adjusted my lot size to account for the 25 pip risk for a total of my max risk of 1%. So guys, I don't doubt in time I'm gonna be able to lower my stop loss, and that's the next level of my trade, is to reduce my risk amount but keep the same amount of risk, 1%, adjust the lot size to account for it, and to let runners run a lot longer without even taking it out at TP2 or 3, maybe taking out 2% while it's at, or you know, 2.5% when it's at TP3, you know, and just let a little runner run. So I'm going to keep this short. It's 11 minutes in. Guys, please comment, please subscribe, please like this video, and let's tap in for my weekly market outlook coming this Sunday in 2 days. And if I post any backtesting videos tomorrow or this weekend, I'll upload it to this channel, Martin Day Trades. And if I do anything else to this channel, just be on the lookout. I might have a trader mindset also this week, so I'll do one backtesting session. I'll do a whole week's worth of information or backtesting, and then I'll do a trader mindset. I think I have written down in my sticky note from work an idea I had. It's the importance of letting candles close. The importance of having candles close before entering a trade. Patience pays. So have that on trader mindset backtesting session, and then on Sunday, my weekly market outlook video. So that's it, guys. Over and out.